Well, we're very excited to have you here tonight for an event on financial tools for inclusion with Professor Durreen Shahnaz. This event is also a kickoff event to let you know about a competition that Insead is involved with called the International Impact Investing Challenge. So I'll explain that a little later. To introduce myself, my name is Christine Driscoll-Goulet, and I'm the Associate Director of the Social Entrepreneurship Initiative here at Insead. I'm usually based in Fontainebleau, but I'm over here in Singapore for a week, just got in today, and I'm excited to meet a lot of you who came for the Impact Chat and who are loyal followers of what they're doing at the IIX. So to get started, I thought I'd just introduce a little bit about social entrepreneurship at Insead, and a little about the activities we're doing here and how impact investing fits into these activities. And then I'll turn it over to Durreen, who will talk about her work at IIX and at Shujug. How does that sound? And at the end, we'll open it up for Q&A. And if you have questions, feel free to interrupt and ask. We want this to be kind of interactive and free-flowing. Okay. First we have to get this to work. Okay. So the Insead Social Entrepreneurship Initiative was founded in 2005. There are three main types of activities within the initiative. The first being research. This is led by Professor Felipe Santos, who is a wonderful professor, very good at creating frameworks for social entrepreneurs, and really adds a dimension of rigorous research to this area, which in the past, since it's so new, has been sometimes a little bit fuzzy on the academic side. So Felipe Santos, he's also based in Fontainebleau and concentrates on a few different areas, one of them being scaling social impact, business model innovation, and he's also done a very good kind of more broad theory of social impact and looking at how social enterprises differ from regular commercial enterprises, and just a good framework for thinking about how you kind of separate social entrepreneurship from commercial entrepreneurship, as well as not NGOs, more philanthropic sort of organizations. The second activity that we have is the Insead Social Entrepreneurship Executive Education Program, which is called ISEP. And this is directed by Hans Wall, who is also in Fontainebleau. Our whole team is in Fontainebleau, so we know we have to get somebody over here in Singapore full-time because there's so many exciting things happening over here in Asia. So the ISEP program has been running for 8 years. This is an executive education program which lasts 1 week. It's offered both in Fontainebleau and in Singapore around November, December. And it's intended for social entrepreneurs who are really looking to scale their venture. So people who founded their organization or high-level executives within their social venture who have been operating already for 2 to 3 years and are looking to achieve that next level of scale. So they come to campus for a week in a cohort of about 35 participants. And during that week, they do a lot of case studies, which we've written about people in our network, so social entrepreneurs that we know, and have lectures on other topics such as innovation, negotiation, financial accounting, other areas where we think they need the most help or work. And this is based off the feedback that our social entrepreneurs give us. It's a very well-reputed program and puts Insead in a very special place in terms of the social entrepreneurship world, because we're the only business school that has such a program that's offered annually. A lot of business schools have programs focusing on managing an NGO, but nothing geared specifically towards social entrepreneurs, run on a yearly basis. So from this wonderful ISEP program, we have this network of about 400 people, most of them social entrepreneurs, but also people who are in their ecosystem, could be impact investors, consultants, foundations. More and more we see a lot of companies who are trying to start a social entrepreneurship department. So it could be Coca-Cola trying to build out their community development in Brazil. It could be Lafarge trying to build out their social housing unit. So we've really created a rich network of people that we can turn to, and then they come and help us with the third activity that we run, which is a social impact catalyst program. So going into more detail on the Catalyst establishes a structured set of activities for students who are passionate about social impact and social entrepreneurship, and tries to unite this ecosystem within the Insead community involved in this space. So how do we get our MBAs to meet our alumni who started their own ventures or who are working in this space, and our ISEP graduates, as well as other people that we're able to meet, and such as Durreen, who comes and helps us on campus as well. And within the Catalyst, we really say this is for students who are seeking to learn more about social impact, hence my lovely acronym. The first S is for support. So this is support in terms of resources for venture competitions, such as the International Impact Investing Challenge, which we'll be talking about in a little more depth tonight, but also the Global Social Venture Competition, various Ashoka competitions. There are so many springing up that we really try to keep our students informed of these competitions and help mentor them through the process. I think we have a couple, maybe Lisa, I send Lisa, who's a current student here and looking at starting a venture. I'm sending you a ton of competitions. I don't know how many you're going to sign up for. But that's one way we try to get our student body involved in what's happening on a broader level. We also have SEIRs. That stands for Social Entrepreneurs in Residence. And Durreen is one of our social entrepreneurs in residence. And this is a wonderful position where experts in their field come back to Insead's campus and mentor students for a day, usually once or twice per year. So they'll come between 9 and 5 and meet with students one-on-one for about 30 minutes. And this gives an opportunity for students to be able to talk to these experts about their work, about a potential venture they're looking to create, about career opportunities. Because in the world of social impact, so much of being able to enter into a career in this field is based on your network. So we see this as a real anchor in the Catalyst program, and it's received really positive feedback and helped to create valuable connections on both sides, not only for the students who are meeting with the social entrepreneurs in residence, but often the social entrepreneurs in residence also inspire students to come volunteer for them. So we hope that it's a win-win in both sides. And then there's also career advice. So I work very closely with the Career Services Department here at Insead. We have dedicated reps who are focused on social impact, both in Fontainebleau and in Singapore. And we try to get as many listings as possible through to the students here, both in terms of internships as well as full-time jobs. If you have any career opportunities that you think might apply to our MBAs, then you can tell me about them, or I'll put you in touch directly with our student reps here on campus. Okay. So the first E stands for exposure, events, and networking opportunities. That's a bit self-explanatory. So again, trying to help students build this network while they're here so that they have the connections they need to try to enter the field, especially if it's not something that they've been involved in before, but something they're looking to transition into. Then we have experience. So this is a very important part of the Catalyst program as well. How do we get students involved with people who are in the field working on these issues so that they're able to understand what it's really like to work for a social venture or in a CSR department of a company or for the UN. So we run a number of different opportunities to work on projects on a short-term consulting basis where students will either work individually or form teams, and during a 2-month period or so work on a specific issue, such as a new marketing plan for an organization, or how can, there's one team that worked with a guy who was in my class. I was an MBA here in 2006, and someone from my class went on to buy a company in Ecuador that produces vegetable chips. And with this production, he works really closely with farming communities. It's a successful business, but also a very, very strong social enterprise as well. So we had a number of students looking at his work with the farming communities to try to see what additional ways could he work with them. Were there educational avenues where he could get involved with their families, or health, ways that he could improve health education, etc. So that's one example. We have another MBA alum who started a school in Africa, and a couple of students worked with him on how he could really make his fundraising strategy more robust. So there are a lot of opportunities out there. Again, that's another place where if you think there are people who might need MBA assistance, you can come to me and talk to me afterwards. And we also roll the project opportunity into an internship opportunity. So this could be for our students who start in January and finish in December and have 8 weeks over the summer where they could do an internship, as well as for students who finish in July, but then might have 6 months before they're starting their full-time position and need a few months in which to work on a venture or get that experience in the field. And then the last part of my acronym, K, is for knowledge. So this is workshops and social entrepreneurship bootcamp that we've developed. At Insead, it's a 10-month program, so it's very, very intense, and there is not always the time you'd like to kind of incorporate what you're learning. I see a lot of smiles and nods from the students who are in the audience. But so what we try to do is create an opportunity for some of the substantive knowledge to get to the students in their first couple months or first 4 months here, because otherwise they might not be able to take an elective on social entrepreneurship, for example, until later on in their last couple of months at Insead, in which case they're not really able to use those tools. So this is our solution to try to equip people with those tools early on. So we'll have different workshops, such as, well, tonight is kind of an impact investing workshop on measuring your social impact, which of course is a big topic for people in this space right now. And the Social Entrepreneurship Bootcamp is another tool that we've created, which has been tremendously successful, not only for students, but also for outside people who are just interested and want to sign up and register for it. This is an intensive 48-hour workshop. It's carried out over the weekend. That's actually the main reason why I've come here, because we're doing one here on campus this weekend. It starts on a Friday evening where people come in with an idea that they want to launch or a problem that they feel passionate about solving but they don't know how. And on that Friday evening they form teams around their ideas or problems, and then over the course of the Saturday and the Sunday they're taken through a methodology to kind of create this venture. So what is your problem statement? What is the vision and the mission that you want for your organization? What is the activity system that you need? Where do you form your partnerships? How do you get funding for this? How do you scale it? How do you pilot it? So all of these areas are addressed. We rely a lot on examples of people in our network and try to incorporate a lot of Skype calls as well, so that people who attend are able to talk directly with some people who are in the field doing the work. Any questions about the Catalyst? Or anything else at Insead for social impact? No? Okay, so now going to more of the meat of our discussion tonight. So how does impact investing really fit into what we're doing at Insead and with Durreen's work, and in general this big trendy word that's come up, which actually has a lot of substance behind it, but is really kind of everywhere right now. So what is impact investing? Well, the Monitor Institute wrote a pretty seminal report for this sector. I think it was it 2009? Yeah, 2009. If any of you are interested in learning more about impact investing, there are many, many different reports out now, but this is a really good one to start with. So you could, I can send out the link afterwards to people who've come to the event, or you could Google Monitor Institute and impact investing and you'll likely find it. But they define it as actively placing capital in businesses and funds that generate social and or environmental good and a range of returns from principal to above market to the investor. And right now, even though it's quite a small market in comparison to philanthropy, for example, and regular investment opportunities, principal investment opportunities, it's estimated that it has the potential to be a very, very large and an important piece of funding opportunities for ventures and other organizations. So you can see that this is Nick O'Donoghue, who's chief executive of Big Society Capital, and also wrote, this quote comes from a report he wrote for JP Morgan in November of 2010. And he is surmising that the market could be worth between 400 billion and 1,000 billion in sectors such as clean water, maternal health, primary education, microfinance, and affordable housing. So it could be big. And I think Durreen will be talking to this point. So I won't spend too much time on that. This slide is really just to create a framework. This comes from the EVPA, which is a great organization, the European Venture Philanthropy Association. And we also have a representative from the AVPA here, so thank you for coming, the Asia Venture Philanthropy Association. And it gives a real idea of the spectrum of what is impact investing. So you can see on the top line, you have the primary driver. It's a little difficult to see maybe, but the primary driver being societal value, and then the blended social and financial value, and on the right-hand side, the primary driver being financial value. And then you have the variety of social purpose organizations, SPOs, that you could possibly be funneling your capital to. So there are traditional charities, revenue-generating social enterprises, and hybrid socially driven businesses. On the right, in the green, you have more traditional businesses. So CSR within a company allocating a percentage of their revenue to charity, and then pure mainstream market companies. So you can see that there's some overlap. There aren't many bright lines in this field of impact investing and venture philanthropy. So you can see there's a bit of overlap here. On the left, if a charity is not making any money or has no potential of being sustainable with the revenue that they're generating, you're really going to be seeing impact only in grant making. And then as you get more toward those enterprises that are potentially sustainable with the revenue that they're achieving, from about 75% or more in their trading revenue, you'll see the social investment coming in with an impact first focus, and as you go down towards finance first. So this is just a framework for our discussion tonight. Doreen's going to talk a little more and give much more information than I could ever do, as she specializes in this. So how is Insead involved, and how can students get involved, and others of you who are here? There are a few different exciting opportunities that we have. The first thing that we have is that on February 13th, this is actually in the Fontainebleau campus, but we'll be taping it. We're lucky enough to have Sir Ronald Cohen coming on campus. He's known as the father of social investment. And if you look at the UK, which is one of the leaders of social investment, he's basically started everything. So he started with Apex Partners, which is a more traditional VC. He went on to start Bridges Ventures, Social Finance, which is the mastermind behind the Social Impact Bond, Big Society Capital. We actually just had 2 people from Big Society Capital over to Fontainebleau on Monday talking about their investments. They're a really interesting kind of like a bank. They have £600 million at their disposal. They're a fund of funds, so they're investing in other intermediaries that are investing in the frontline organizations doing the social entrepreneurs themselves, doing the social impact work. And they have £400 million that is given to them from dormant bank accounts. So if people haven't used their bank account in the UK for 15 years, it doesn't just stay in the bank. It goes into this pot that can be used for social investment. In addition to that £400 million, they have £200 million that has been given to them by 4 of the high street banks in London. So it's an amazing opportunity to see what can be done with this amount of money and a lot of smart people. So Sir Ronald Cohen is behind that idea and was lobbying the UK government for 10 or 12 years before it became a reality. So he's really a person to read about and get to know. Secondly, we are part of the International Impact Investing Challenge. Third, we have a forum in May in Fontainebleau on impact investing and how to help create an industry from the innovations that we've seen over the last few years. And fourth, we are also the knowledge partner for another conference called Partnering for Global Impact, and Sir Ronald Cohen will be doing the keynote at that conference as well, which is in Lugano in July. And lastly, we are members of the EVPA and AVPN, which give us some wonderful benefits to go to the annual conferences that are coming up. So how to get involved with the Impact Investing Challenge. You'll see that there are certain worksheets there left for you. Some of you have little postcards about the International Impact Investing Challenge, and others have a flyer, but they basically have the same information. This is a really exciting competition that was founded by Kellogg in Chicago, the business school in Chicago, 3 years ago. And the purpose of this competition is to get graduate students thinking of new financial instruments that can be used in the impact investing sector. So how can they create vehicles that institutional investors could use to place this capital and achieve social and environmental good? So it's about mainstreaming this, which I think is important to a lot of people working in the sector. How can we unlock more capital to achieve the good that we're trying to achieve? To get involved, you need to submit a 2-page prospectus, so it's not a lot, 2 pages isn't that much, by March 14th. The finalists will be announced 2 weeks later on March 27th, and then top 10 finalist teams are going to be flown to DC, all expense paid trip to DC, for the finals, which will be on April 26th at the World Bank. And we have a speaker from OPIC who's there, as well as Kenneth Lay. And you'll be sitting in front of people who can really make a difference with what you're proposing, who could really use the instruments that you're creating for their organizations, because they're going to be institutional investors with a lot of money behind them. It's sponsored by the Rockefeller Foundation, Morgan Stanley, and Calvert Foundation, among others. So it's a really great opportunity to get involved. Even if you just submit your 2-page prospectus, it's going to be reviewed by experts in the impact investing sector, so you could make some connections there. And there are also opportunities to get mentored by people when you're submitting your prospectus. For people who are MBAs here at Insead, I'll be passing out a sign-up sheet. If you're interested, we're going to try to hold a workshop in a couple months, so not a couple months, a couple weeks, Insead time, so you can form teams if you don't have an idea yourself. Again, stop.
Yeah. What's the team size?
You know what? I forgot to check online for that, but the rules are online. I think it's between 3 and 4, 3 and 5, but I don't remember offhand. I should have checked, but it's online. Okay. Secondly, so for the Impact Investing Forum that's happening at Insead on May 23rd, I'm going to be creating a student committee to get involved in organizing this as well. So I'll be passing out a separate sign-up sheet for those of you who are MBAs to sign up for this. And anyone else who's here and who's interested in learning more or give feedback on what you think is important to cover in such an event, then please talk to me, or if you have ideas for speakers who would be good. We're just forming the program now. But it is scheduled to happen the day before the private equity conference happens in Fontainebleau, so we're also hoping to draw in some of the Insead alumni from that space as well. So again, a bit about mainstreaming. Partnering for Global Impact, I'll have room for 2 students to go there and do social media blogging, as well, social media coverage, as well as doing the write-ups of the session. So you'll get free registration and potentially even free travel and accommodation. So watch out for emails from me about that. And also with the AVPA and the EVPN, we have the opportunity to get students to go without paying registration, again, in exchange for doing write-ups. So I'm in touch with the AVPA, and we've done it for the last 4 or 5 years with the EVPN. So that's a wonderful opportunity for you as well. So again, as a student, look out for emails from me. So now I'd like to turn to Durreen, Professor Durreen Shahnaz, who is the founder and chairwoman of the Impact Investment Exchange Asia, IIX, and the founder and managing director of Impact Investment Shujog, which is the capacity building arm of the social stock exchange, the IIX. So it's really amazing to see what Durreen has done. She's also an adjunct associate professor at the Lee Kuan Yew School of Public Policy. As I mentioned, she's been a social entrepreneur in residence here at Insead. Began as an investment banker and also did some work at Grameen, the World Bank, and Merrill Lynch as another investment bank. Studied at Smith, Wharton, and Johns Hopkins, and also is a TED Fellow, member of the WEF Global Agenda Council on Social Innovation, and on the CASE I3 at Duke University. So very impressive. She's really built up an amazing network here in Asia, which is apparent from all of you who've shown up here tonight. And so I'll turn it over to Durreen, who will then tell us about her work.
Great. Okay, great. Well, thank you, Christina. It was it's really, I mean, I have to applaud you. This is so much happening at Insead, and you're spearheading so much of it. So it's amazing. And it's always I feel I was in business school, I guess now over 20 years ago, and I almost feel like I want to come back. It's a different world now, and it's just really remarkable. You're very lucky for those of you who are in Insead, because it is an amazing institution. So congratulations to you. And I think this competition, it sounds like it's really taking things to the next level, right? And just in the global setting, bringing World Bank into it. So it is really a new ballgame. Yeah. So fantastic, good job. I'm going to sort of start with a little story, and it's very, for me, I always say, first of all, I'm older than I look, so just so there it's stayed there. And it really is, this is something, this whole movement of impact investing is something that I did not think will happen in my lifetime. And I think, for me, it is really in some ways, trite as it may sound, it's sort of living my dream. And it's really because, I guess, just to give you a little flavor, I mean, I'm from Bangladesh, so I grew up there. And, it is a country where women don't get much opportunity, etc. And I guess I was fortunate to have sort of broken every rule. And I think back now, 25 years ago when I started my career at Morgan Stanley, it really was for me not so much to, see how much money I could make, but it really was almost a puzzle. I mean, coming from Bangladesh and coming from the poverty that I came from, it really was, for me, it was a mystery how much power can be wielded, from these institutions. So it was, I feel like my time there was more sort of a daze. I mean, I guess probably was also from working 100-hour weeks, but it was really, in terms of, wow, I mean, there's so much of power that's coming from here, right? And And for me, really the thought was, and this is again, really a quarter of a century ago, I mean, how can we take this power back to my country to do something with it? Because once again, I grew up in a system where it really is very aid dependent, and for us, everything was dictated by the powers, of the West on what we should be doing, which bridge we should be building, and what needs to happen in the country. And so I worked in Morgan Stanley for a few years, and I still remember in my exit interview, they were convincing me to stay on, or how come you're the only one who's not applying to business school or staying on? What's wrong with you? You're going to ruin our record. And I remember it was this woman, I said, I'm from Bangladesh, I really want to go back. And I still vividly remember the HR woman did not know where Bangladesh was, or the fact that it was a country. And I think, it was really remarkable. It really shows, like, at the end of the day, in a place like Wall Street, I guess, in some ways, it doesn't really matter what your gender is, what your nationality is, as long as you bring in money. And so then I went back to Bangladesh, and I was looking around where I could use my finance knowledge, and there were all these, the Standard Chartered was there, Grindlass Bank, these are sort of the banks which are, kind of only foreign banks there, some local banks. So I said, yeah, I can, I guess, go and work in a bank, but you know what? I want to do something which really gets me in touch. And I looked around and I saw this small bank which was giving loans to women. So I went and interviewed with this gentleman called Professor Yunus. And I still remember he put me on probation because I didn't have a master's degree. And he said, you don't have a master's degree, so I have to put you on probation. I don't know if you can do this job. And so lo and behold, Grameen was doing their first big financing round, and this was about $5 million. Think about it. It was a lot of money, $5 million at that point for Grameen, and now it works in billions. And so I, worked in this financial model and all this, and there was a due diligence team that came from the US. And again, it was one of those moments. I was in a sari, so I made the presentation. And this woman said to me, turned to me and said, you're so good at this. It's really unfortunate you were born in this country, because if you were born in my country, you would work in a place called Wall Street and make so much money. So anyway, so I think that's, it was one of those moments where it really showed me how I was really fortunate to be able to have lived in these different worlds and different silos, right? And it really was all about breaking these silos. So I guess fast forward sort of my career, it has been about that. And I started I'll just skip all the things that has happened, but one of the biggest things was I started my first company, which in nowadays it we call a social enterprise. It was a marketplace for basically ethical and handmade goods around the world. This is something that I took away from Grameen, that this was a need in the market. And in 2009 I started it, grew it, went through ups and downs, and sold it to National Geographic in 2004. And I still remember, even if you have to understand, this 2004 when I sold it, and I still remember this whole concept was so new. And I remember that's the time when Columbia Business School, one of my investors was a trustee there, he came and said, oh, you know what, this would be something really interesting if you go and teach our students, right? And now it's 2013, how much things are progressing and so fast, right? It's incredible. So I think I want to really applaud all of you, because I think if you're here today, it really means that you believe in this system. You believe in the fact that you can use business and finance to do good, which I have always believed in. And this is really the story of today. What we're going to talk about is not really just impact investing, but really breaking down the silos and how you give every single person in this planet an opportunity to create capital markets, to be a participant in the capital markets, right? So it's really inclusive growth through this new system called social capital markets. So, it's interesting, I always start with this because, it's not all bad news. The world actually is in a good shape today, right? And if you look at it, just throw some numbers around, beginning of sort of 1900s, the global GDP was $1 trillion, right? Then fast forward, come to the 20th century, in 1990s, it was about 27 trillion. And in 2010, that number grew to about 79 trillion. So it really is, obviously exponential growth that the world has been witnessing. Big part of it, obviously, is technology, medicine, great, the Human Development Index is showing wonderful results. People are living longer. And also, frankly, the technology, right? I mean, mobile, I remember when I started my company in 1990, the internet penetration was 0.05 out of 100. And now the internet penetration is over 50. Mobile phone, barely anyone had mobile phone. It was about 0.5 penetration. And now it's about 80, right? I mean, even in Bangladesh, I mean, in the villages, people have 2-3 phones, right? So it is really remarkable. So these are all good news and things to celebrate. And the reality is, Asia has been a big benefactor for it, right? I mean, if you look at it, the reality is for Asia, I mean, we are, living better, we're eating better. I mean, India and China is a big benefactor of it. I mean, again, I look at my own country, Bangladesh, where we have had steady growth rate of about, 5%. So it is really the fact that now we have a middle class in Asia of about 600 million. It's a substantial number. So these are all fantastic news. But the reality is the absolute number of poor, is still growing. So I think while all of this is happening, interestingly, there are groups of people who are being left behind. And I think this is where this whole concept of Gini coefficient, plays a big role. So those of you who have taken, developmental economics, you remember this from your time in those classes, is the Gini coefficient basically shows us the inequality. And interestingly, we just showed 3 countries here in Asia, China, India, and Indonesia. And the Gini coefficient all went up substantially. So what does it say? It really says the rich are getting richer and the poor are not keeping up with it. In Asia alone, we have over 3.3 million high net worth individuals. Okay, so in high net worth individuals, there are different definitions out there, but sort of general definition is, of course, someone who has over $50–60 million. This is a lot of money. So in Asia, there's a lot of money. And interestingly, as our colleagues at ABPN will attest to it, there's not much philanthropy in Asia. Because again, this is a lot of it is new money, and in Asia, we didn't have a system where the government took care of us, so it really was family, right? And that has really stayed on, where even if you have wealth, first you take care of your extended family, then you take care of your village, your clan, etc. So it really is the whole thought of giving the money away to someone else is just really still foreign. So the money is there, but unfortunately it's still not being used. So the interesting thing is, if you look at it, so the key factors, for this inequality that's happening is really, again, all of you know these, and it's really the not having access to the basic, services, the technology, infrastructure, and really, frankly, lack of a lot of the opportunities, right? And this is where, basically social enterprises come in, and this is what Christine sort of touched on before, is these are companies which are filling this gap. You have the NGO community who have actually done tremendous work, but again, they're limited by what capital they have. They're public servants, the public service sector, who are doing work, yes, but they're still limited with the lack of capital. And then you have the private sector, frankly, who really was not getting into this, right? So there really was a gap. And interestingly, there are organizations who started popping up, who really said, there's a need, and really more of a market demand, I would say, and in meeting that need. So you can see it's really in every single sector you can imagine, in fisheries, and health, and water, technology, agriculture, you name it. And it is really, really amazing how there are thousands and thousands and thousands of these companies all around, because we are now working with a lot of them. So one of the things these social enterprises need, among many things, is actually access to capital. And I think, as I kind of painfully know, even with my first company, good luck in trying to go and find the people who will actually embrace your mission as well as give you the capital. It is really a double whammy, right? You're not only trying to convince someone that they should buy into your idea, but also you're trying to convince someone, this actually is going to do some social good, and the investor may not care about the social good. So it really is a difficult sell. So in terms of impact investing, once again, I won't spend too much time because Christine showed you that chart, which is much better in explaining this. Just very quickly, in traditional investment, you have the traditional businesses and you only have commercial return. And in grant, of course, it goes through the not-for-profits. You have social return, and impact investing is obviously pulling that together. We have financial return, social return, and environmental return as well, and obviously doing this all of this in a very sustainable way. This is something that you'll probably see in many different ways whenever anyone's talking about social capital markets, the impact investing space. And this is actually, I always show this because, once again, going back to my original story of the power of money, okay? If you look at the global asset, right, like if you just add up all the assets, it's really, in a given day, it's between 56 to probably, $65 trillion, right, give or take. And interestingly, what has happened is, this is what's sort of the power out there, right? But, the power is shifting a little bit, and it is an interesting trend. If you look at it with the ESG, the environment, social, and governance, this sort of was the first movement that started where companies started reporting, what good they were doing. Again, long way to go. If you look at Bloomberg, if you guys use the Bloomberg terminal, there are about now 4,000 companies who report their ESG, right? But once again, it's very interesting. It's the individuals, it's the shareholders who are saying, you know what? I actually want you, my mutual fund company, I want you, my fund manager, to actually go and invest in these ESG companies. So what's happening is it's demand driven, right? So more and more companies are saying, okay, maybe this is something we should be looking at and doing. So now this is about a $20 trillion business, right? Now let's move forward. This again started about 15 years ago, roughly. We have the social responsible investing. About 10 years ago, it was almost next to zero. Now it's again $7 trillion. So now it's again a move further into the space of doing good, right? Where you're talking about not only just reporting you're doing good, but now you're saying, you know what, we are not doing bad, right? So we are not actually doing something that is, killing people, making guns, or whatever it is. So it's really the negative screening. So that's what SRI is. And that's something that, again, it's a growing number. It was in the right direction, right? And then, as Christine mentioned, the impact investing number came in, from the JP Morgan report, which they're estimating, say, about, $1 trillion or so. Now, the reason we show this, and this is not drawn to scale, okay, this chart, is really because if you look at it, on this side, you have $60 trillion to play with in the global market. And on this side, so far, there's a US number, philanthropy, which is about 300 billion. Venture philanthropy, about 50 billion. It's like literally a drop in the bucket. You're just like really playing with numbers. It's just so off, you can talk about it. So the reality is, here, interestingly, it really shows the fact that there is very little money to take care of all those needs that is out there, which is next to impossible, right? So that's where, frankly, impact investing comes in. Now, what is social capital markets? It really is taking impact investing to the mass. So really sort of stepping back and pulling all the players, who are in this space. So it really is the social enterprises, the investors, and very important, the ecosystem players, right? So this is really pulling all of them together and saying what role they'll play in order to make this whole system work, right? This infrastructure work. So the key steps in creating this is really what Insead is doing, ABPN is doing, among the many, many players who are in this, is really the three things. You have to build an infrastructure, you actually have to do research and advocacy, and then you have to actually catalyze it, right? And it is, again, they're all very big words and very amorphous, but the reality is everyone has a role in it. And the nice thing is it is happening. It is happening in a very symbiotic way. And where we come in on IAX and Shujo is really on the investment side. So we have two companies, and IAX has actually 3 investment platforms: Impact Incubator, Impact Partner, and Impact Capital. So as the names indicate, the incubator is for very small investments. We have a partnership with the Silicon Valley VC fund there, which backs the deals for us. Impact Partners is a private placement platform where we now have over 200 investors. These are high net worth individuals, family offices, foundations, etc., who are interested in actually putting money in as investment in social enterprises. And then impact capital is the trading platform for that. So it really is taking it to the next level, saying it's not only investment, now you have liquidity in this investment. And impact capital is something that hopefully will be launched pretty soon for us, so which is very exciting. So we have a lot of activity going on in the first two platforms, and soon to becoming the third platform. And interestingly, as we have been doing this, we're also finding out how much more work we need to do in terms of technical assistance, getting the social enterprises ready, and interestingly, a lot of advisory work. And I'll sort of touch on that a little bit. Again, it's all sort of in the spectrum of impact investing. Shujog, on the other hand, really focuses on, just as Christine said, capacity building. So we do a lot of impact assessment work. We actually work with the social enterprises, once again, to get them ready and see where they are. And then research. We actually do a lot of research in this space, and especially in Asia, where the research is very needed because we really don't have that many people doing it. And it has been very helpful for us because that really has what enabled us to get in touch with a lot of people in this network and bring them in. So it has been very effective. So we see sort of ourselves what we're doing is enabling a lot of these other players, to come in and get engaged, and in effect, really creating the social capital markets. I will I think I don't have too much time, so I will hurry up a little bit. So one of the things we have to do, and this is a little just a pitch out there if you all are interested, is we do have a big conference, a big forum, where it pulls a lot of this work together that's happening in Asia, in the impact investing space. We had a very successful one last year. There were about 450 people. And then this year, there'll be about 600 people. And we're doing it this June 13th and 14th. And the theme of it is investing in inclusion. So once again, it's really going after this whole thought of how this happens. And Professor Yunus, my former boss, will be there. And what I'm really excited about is his big thing is talking about social business, which is really sustainable not-for-profits. And now he has been not that happy with the whole impact investing space, but now he's actually going to, giving us the olive branch, and we're going to all talk about it, how social business is a part of it. So this is going to be great. So anyway, so this is sort of really goes into detail of how we are kind of making the investments happen. This is to impress you, so you don't have to read it. This is literally the process that takes place in terms of when social enterprises. So I want to see a lot of Insead entries. When you're ready to actually raise investment capital coming into our platform. Where you come in and what is the process that you need to go through. Because again, it really is a very thorough evaluation because it's being evaluated for your financial return, your social return, etc. So, and then the same way we screen the investors, because once again, not anyone can be an investor. It's an investor who actually have to care about triple bottom line. And now at this point for our Impact Partners platform, we can only be an accredited investor. So we have to be quite careful about that. So those are all the process needs to go through. So now recently we also just introduced this new concept of Shujog Acts, which really is to looking at, because once again we saw a lot of the social enterprises are doing fantastic work, has been around for many years, be it in clean tech, be it in fair trade, etc. But they actually need a lot of hand-holding to get them investment ready. So now we just launched this new service where we are getting in Shujog, because Shujog is a not-for-profit, we can actually get philanthropy dollars to get these social enterprises investment ready. So this is actually something really big for us. So we're quite excited. So we are going to be launching this soon, where basically the thought is the Acts sort of intervenes, works with SE, gets it bigger, and then they can actually get more investment capital. We are also setting up a guarantee facility. Where once again we're seeing how to engage the investors more, and one of the things that we're noticing is investors are more willing to come in if there's a guarantee mechanism in place. So this is something that is in works, and hopefully we're going to actually start this in Indonesia first, where once again when you're investing in a certain sector in a certain country as an investor, your investment is guaranteed to a certain amount. And in this case, hopefully, if everything goes well, it looks like USAID is going to come in as one of the guarantors. Once again, a big stimulator, for this space. We're also creating a fund. So we just launched a $50 million impact fund, which is called Impact Earth Fund. And again, the thought behind it is we have now in our pipeline literally hundreds of deals. We have many investors, but we also see a lot of deals where none of the investors are interested in. So we really feel that we can play a role in stimulating some of these investments. So we have created this, we're in the process of fundraising for it. So we're creating this fund, which we feel that will be essential in terms of, again, sort of catalyzing this whole space. So we're very excited about that. Social impact bond, I won't spend too much time on it. You've been reading a lot about it, and interestingly, what's happening is we are getting a lot of people who are coming to us and asking, can you help us think through how this will be done? And one of the first places we're starting to work on the social impact bond side is actually Korea, where Korea is really aggressively getting into this space. So they have approached us in terms of working with it.
Do people know what a social impact bond is, or would you like Durreen to explain a little bit?
Yeah.
Little explanation?
Yeah, sorry. Maybe you should use
No, go ahead. No, that's okay.
So Christine will jump in. So basically, social impact bond is something that was started by social finance. So as Christine was mentioning, Sir Roger Cohen, who founded it. So the whole thought of it is really saying, okay, taking a pure sort of not-for-profit and seeing how you can basically have, it's not really a bond, I guess, but it's more like a fund, issue securities against the money that they need now, right? And then they'll pay it off based on performance, right? So in this case, the first social impact bond that took place was in UK for $5 million. And this was for prison recidivism. I can't say the word.
I never can say the word. Recidivism. Yeah.
Recidivism. So basically, the whole thought is, the private sector will get paid back if the prisoners don't go back, to jail. So it's a great way, I think, to really engage the private sector and start to get them to embrace the whole concept of actually social return. Right, so I think which is fantastic, and I think Christine knows much more than I do in this. But what was really nice for us to see that how different economies, sort of the wealthier economies, where maybe a lot of the things that we think coming from South Asia or rest of the poorer Asia is more the needs are, and some of these countries don't have that need. So what they're seeing is, okay, maybe we can improve our prison system. Maybe we can actually use this for the aging population. So we're actually seeing some of this sort of the same themes coming out in Korea, Taiwan, and Singapore. We are actually now also in the process of creating a buffer fund for RAC. For those of you who don't know, that's the largest NGO in the world. And they are creating basically universal healthcare in Bangladesh. So where they're starting off with catastrophic incidents. So basically the thought is, in poor countries like ours, people are not into paying insurance premiums because, again, every dollar is so precious. So every taka is so precious, let's say. So what's going to happen in this case is, and we just structured it, it's very exciting, where if someone has an accident, someone has cancer, they go to the clinic, and that's when they actually can buy it right then. Okay, and so again, the default rate is going to be high, but the reality is there's also a payment mechanism in place. And what is going to be, it's going to be almost a subordinate debt that is going to be issued to raise the funding for it. So it's all, I'm just throwing sort of different cases very quickly at you, in the sense that it's not only social enterprises trying to raise investment capital, right? So this whole space, there's so many amazingly interesting things happening. And a lot of these things, to be really honest, people are coming to us, like Bragg came to us and said, can you help us, sort this out? And we have this problem, and how do we actually solve this problem by using market mechanism, right? And that's basically kind of the big 10,000 feet question. And then, we created this whole structuring for them. So it's very, very exciting. Bond issuance, and this is one thing, again, a lot of the NGOs are coming to us, the NGOs, where they're seeing in the horizon, the money's going to go away. So they are coming to us now, and they're saying, hey, can we actually do some sort of a fundraising? So what we are doing now is we're talking to a few NGOs, we're looking at the future streams, of their cash that's going to come in, lumping it, and doing a bond issuance right now. So we are actually now, talking to a few of the NGOs in those terms. Again, just really, fantastic, because what we're doing is, what we're seeing, we're finding ourselves doing, is finding many different ways to engage with everyone in this space. So which is great. So stop me. I'm talking very fast because I know Ms. Lena wants me to finish up. So as
I think it's okay because we have time till 8:30 for Q&A. So
okay.
You can take your. It's okay. We're not over time really.
So we are working in all these different countries in South and Southeast Asia, and hopefully by the summer, if all goes well, we're actually going to start our work in Africa as well. So we're very excited about that. And this is where sort of our reach is in terms of the social enterprises and sort of our clients. And our investors sort of come from all over Asia, Europe, and the US. Now this is a chart that I love. I know it's very busy, but I think this is one of those things that I'm a bit of a nerd. So I think for me, when I sat down, I said, what? Where are things today, and what has happened, and where does it need to go, right? So if you think about it, this is 2009. This is when still there was like really. The whole space was quite uncoordinated, and and you can see how quickly it's coming together, right? Now 2012, a lot of marketplaces started being built, right? And then 2015, a lot of the value that has started being captured. Because I think a lot of the investments that are happening, a lot of them are going to be realized around this time frame, right? And of course, it's a maturity. This is actually something that Rockefeller Foundation had put together. And what I said was, okay, this is very interesting. Now, where does it fall vis-a-vis what has happened so far? And again, this is very much in Asia's context, right? And you see the reality is, yes, there was some infrastructure building that happened, some research and advocacy, some catalyzing, and some of good leadership that came in. But for it to actually have more of a substantial growth, a lot more needs to happen. And I think that one of the things that I would put a lot of emphasis on is the leadership. And this is something that this is sort of my new thing with the governments, because Christine is absolutely right. UK is a leader in this space. Because you know why? End of the day, you still need the government. And the UK government has been an amazing, amazing, amazing ambassador for this. They have a third sector ministry. The government has created big society capital, et cetera, the list goes on. Nowhere in Asia it's happening, right? And it is something, in some ways you'll say it's good. So the whole space is sort of growing by itself. But where the government is getting involved, say in Thailand or in Korea, they're still fighting about the definition of social enterprise. But having said that, the government can play such a big role. They can actually, if they, even just by a little bit, if they give a little bit of a tax incentive, right? You know what? It's going to open up floodgates. And I think this is something, hopefully, in the next few years, we'll see more of. As more capital comes in, you have, more sort of wonderful ideas coming to fruition, et cetera. We will see more of a leadership, from the government, from the public sector. And I think that's sort of my wish, and I hope, that it happens, because I think without it, this will still remain a niche. And I think we know this painfully because, of course, we are trying to create, the trading platform, which is a lot of dealing with the government and filled with regulatory hurdles. And it is a regulatory hurdle nightmare, because I think the reality is the governments still don't understand this space very well. And I just feel that everyone else is sort of moving very, very, very fast. Mm-hmm. And I think this is something, it'll be fantastic, Christine, for the business schools to think about, which is how you get the public policy schools, I'm sure you're probably thinking along this line, how to get them into this space to say, will you do this? And bring the government officials into this, right?
Yes, and that was actually one of the main panels at the last EVPA conference in Dublin, was bringing in the European Investment Fund, who's looking at regulation and talking about what could be done in this space so that Europe could lead the way and make it easier for entities. We also did a conference in Berlin last year, in 2011, for Insead. It was a social entrepreneurship conference focusing on public policy, and that was in connection with the Hertie School of Public Policy. Right. So it's definitely on our radar, and something that we keep trying to push as well.
Right, so we have to now get you to do this in Asia.
Exactly. Okay. Next step.
Good. So, that's frankly, it, and I think the rest of it is, it's just really food for thought, so basically how do you accelerate, so inclusive growth through social capital markets. I gave you really a bird's eye view of what's happening, but the good news is a lot is happening, and I think now the power is in your hands, because we need a lot of local champions, leadership. We need more infrastructure to be built, and we need more good ideas turning into action, and frankly to encourage a lot of this wealth to come into the space. So anyway, all food for thought, but thank you very much, and any questions, please ask.
Yes, thank you. Yeah, so now we have about 20 minutes for questions, and then afterwards we can continue questions around some refreshments just outside the amphi. So, some questions.
Yes.
And could you just kind of introduce yourself before you ask your question? Yeah, thanks.
Yeah. Good evening. I'm Michel Anglade. I'm working with Save the Children. I'm based here in Singapore in our Asia regional office. Many thanks, Durreen, for your excellent presentation and for mentioning all the excellent work done by IAX. During your presentation, I was trying to see how we can reconcile, different points you made. The first one was basically private sector, financial return, NGOs, social and environmental return, social enterprise, you get both the social return and the financial return. So first part of the, let's say, the jigsaw. Second one was your big picture in Asia, still very large number of poor people, and inequality increasing, which means that we'll see poverty increasingly being concentrated into, marginalized group, marginalized population. And these people, obviously, they need access to basic services, health, education. If you target these people living on less than $1.25 a day, which is very little, and as we know, basically, most of this money will just cover the food cost of a day. How do you provide for a social enterprise, let's say lands, basic services to people living on less $1.25 a day? So how can you make a kind of financial return when you target these people with basically basic services?
Right. Now that's a very good question, and I think that and this is really going to the next level, right? And if you look at it, and when we work with organizations, even when I had my company, we were directly working with the people. They were probably the next level, right? So this really is their income level is really more than $2 a day. Now, having said that, so if you're starting a company, and that's really always the tension, right? Because you do need to be working with people, either they have the skill sets, if you're producing a good, right? Or they have the ability to buy it, right? So they're producers or purchasers, right, of this good if you have a company. You do need that level. Now, having said that, there are, of course, over 1 billion people who is under the $2 a day. And what's happening with that group, what we're seeing is a lot of the NGOs like BRAC, we're working on a few other projects there. What they have done, they've been very smart about, and I think we'll see this model more and more in a smaller scale. BRAC is humongous, giant, is using basically grant funding to get the operations to a certain level, right? And then looking for the financial, return. So it's almost like initial funding is all basically grant funding, where you don't have to worry about returning the capital in any form. And then once the operation is now self-sufficient, can run it, you can really go to the next level. And it's interestingly, I can't mention it because these are all your competitors. We're working with now one specific INGO who has several of these projects, in Bangladesh, in India, where working, say, cashew nut production. The other one is microinsurance. There is also distribution of empowering women to basically go and sell. It's like basically Avon Lady model. If those of you know what they, so that they go and basically sell the products. So what they have done is about 5 or 6 years, these projects really lived on grant funding, right? So now they're coming to us and saying, how do we turn typical grant-funded project, which is now financially sustainable, right? Because there's a lot of sunk cost you can't recover, right? And that you can use grant funding for that. And now turning them into a proper organization, okay? And can you help us do that? What is the organizational structure, the management structure, the basically the financial structure that is needed for that to happen? So I think, once again, we did not think we would be getting involved in these things, but we are, and which is actually quite exciting. But what this shows is a definite shift in the thinking as well. So it's almost sort of saying, before, I always say, I mean, having worked at Grameen Bank, it took Grameen Bank $190 million to break even, right? So there is not $190 million there around anymore, okay? And again, when Grameen got started, when BRAC got started, Bangladesh just came out from a war. There was a lot of money that was thrown at that country, right? There's no longer that case. So I think what organizations are waking up to is the fact that the bigger ones, they're saying that, there's still this need of the very poor, the ultra poor, and perhaps we can still play a role for a certain number of years, but then we actually bring them to a level that they can be self-sustainable. And that's where I guess this comes in. So I think which is actually kind of nice, right? It's a new way of thinking. Yes?
Yeah. So you talk about effectively quite a big explosion in impact investing in the last 5-7 years. And on the face of it, I can understand why it sounds very attractive to investors to promise them this financial return that they don't have to sacrifice, and also social, using their power to change the world for the better. But how has it actually played out? I mean, have returns from impact investing been okay to investors?
Yeah, I mean, and I'll tell you, it's not sort of having it all. It's not saying, okay, you can still have your 30% return and also, do wonderful things. If that was the case, I mean, we all will be in a better world, right?
Absolutely.
So I think the point is, it really is with the investors. It's very interesting because now, we deal with investors day in, day out, and it is fascinating because there are investors who come in and who say, for me, the impact first, right? Sure. And if I get something back, that's fine. And of course, we love them, right? We absolutely love them. But then there are investors who come in, it's interestingly, I would say a lot of them, where they really want the social return, and they just really are, trying to sort of argue why it can't have more return. And we have to keep on reminding them there is a social cost.
Sure.
Right? And someone has to bear it. That's the whole point, and you're getting that social return. So I think there's still a lot of education, that needs to happen. And I think people are, one of the problem I think in this space is there is a lot of hype, and people are thinking that this is some sort of panacea. Oh, hold on, we didn't know. We can not only make, all this money, but also do good, right? And also the whole thought that this is a replacement for philanthropy. It's not. Right? And that's something we always say, there'll always be room for philanthropy, and there has to be, there should be, right? This is just now almost a bridge, between the two extremes, right, that had existed. So I think it's, people are definitely seeing the social return, there's, the financial returns, but I'm the first ones to say, and again, a lot of people disagree with me. I've been in panels where, like, shouting matches. No, you're wrong. It can. Yes, some entities can give market return. Absolutely. And of course, the example is always used at 2008, which is a fantastic example of when the whole world market crashed. Microfinance was still giving 14% return. Absolutely, right? But the reality is, it's not, more often than not, that's not the case. And I think we just need to accept that, and I think and we feel that part of our work is also to educate people that you can't have it all.
Sure. But I suppose investors are slightly skeptical about what that trade-off is. They don't really know, I suppose. My question
and I think that's the trade-off is, I don't think we don't really go into that detail. I would say we really focus on the positive. We don't really focus on what you're giving up, right? I mean, it just sort of, but I think what has worked well for the investors, I see, is the fact that when they see sort of a bigger picture, okay, so this is actually not something in by itself, and you do see these organizations are evaluated, very much initially on a financial side. No matter how much we try, they will look at it from a financial side first. And this is typical. You look at the comparables, you look at the, all the risks and the opportunities, et cetera, et cetera. So it's like all of those things, and and the social side, of course, is there. So, but it has been fascinating for us, and I think that's something we always say in our organization. We are growing too fast. Sometimes I just feel we are growing a little too fast because we are just being bombarded from every direction. And I really hope that we have the time to almost, record a lot of these things, which we don't have time. Even like these investor feedbacks. I mean, we internally talk about these a lot, and we have a lot of knowledge, but we don't have the chance to say it to the world. So maybe one of these days, we will do. So that's where the forums, in a way, are good, and where we can talk about it. Yeah.
Hi, so my name's Warren. Thank you for your presentation. I'm one of the students here.
Oh, great.
I just have a quick question around your point there about leadership.
Yes.
So I understand that one of the key needs, obviously, is capital. But then I used to work in Nigeria and China as well prior to Insead. And one of the key challenges we found is that even if you have the capital and the money, you often lack on the leadership side of the management in terms of being able to execute a lot of these ideas.
Yep.
I was just wondering if you could comment about what that looks like in terms of the challenge there for Asia. Do you believe, to what extent do you believe you've got the leadership and management capacity in these organizations to be able to execute on the ideas that are being generated?
You know, from what we're seeing, the reality is I don't think the leadership abilities are any less than traditional space, right? And always, you know, I mean, again, I'm an intense entrepreneur, and I always, and that's, you know, so much to, and everyone in the office is very much, you know, in tune with that. I think you know, just forget social entrepreneurship. Just think about entrepreneurship, right? Yeah. I think for entrepreneurship, what's the number one thing that you need? You know, you need to know how to sell, right? You need to know how to sell. You know, you need to have risk appetite, right? And you need to know how to execute. Okay, so you may have the most brilliant idea. If you can't execute it, forget it, right? If you can't sell it, forget it, right? So I think all of these skill sets, it's just not for entrepreneurship, but they're also relevant for social entrepreneurship, right? So I think what we do see is the fact that perhaps a lot of organizations, they may get carried away on the social side so much, they sometimes forget to be a little more buttoned down. Okay, so I think we do see that, yes. So that's why I guess you saw that we're not getting into more on the technical assistance, where frankly they just need a little bit more hand-holding in getting that business plan a little more polished, right? Actually looking at their numbers and getting it more polished. So really just getting them to that next level. And in some ways, you know, I'm glad we have, you know, it's like that, because I think sometimes when organizations come to us, when they're a little too polished, we actually start questioning it. We're like, okay. Because I just think that this space also, you know, it is very interesting. There's so many competition. You see, you know, this Ashoka and this, that, the other. End of the day, how many of them are really sustainable organizations, right? And it was very interesting. When I was full-time at LKY school, one of the things I did with my students is actually look back at the Ashoka Fellows, like 5 years prior, and said, how many of them still are running the organization? It was less than 10%, right? So I think it's not really about the entrepreneur only, right? That's the first step. But then the entrepreneur has to be able to create an organization, right? And I think that's something that's still missing a little bit in this space. I think there's still a little bit too much of hero worship, okay? Entrepreneur, the hero. Well, the hero has to kind of produce something, right? So I think that's maybe some of the disconnects that's happening, right? So I think, you know, and at least for us, I mean, I feel happy when the entrepreneurs who come to us, a lot of them can't speak English well. Fine, you know what? That really shows that they're not doing it to win some competition, or they're not doing it, they're actually doing it for the work, right?
Are there any players that have done a good job in your mind of actually being able to help entrepreneurs transition to being in that kind of more?
Well, I think, you know, once again, right now we are kind of reaching out to some partners, you know, who are, say Dasra, you know, in India, they have done a good job, you know, in sort of doing this. We have started doing this quite a bit, again, more for demand. We didn't think we would be doing it. There is this Enovent, right? Enovent is doing that. And then Challenges, right? Challenges, what's it called? Worldwide. Yeah, they're out of UK. They're doing that, where basically they, I think they take retired executives and then they send them to these organizations. So there are actually a number of organizations that are doing that. So we are trying to engage them, you know, with also the SEs that, you know, they're working with. But what they don't do is sort of that last step in getting them investment ready. So that's, you know, kind of where we a lot of times come in. But they have been great partners for us in terms of working with them. Absolutely.
Hi.
Yeah, hi.
Thank you for your sharing. I'm very new to this, so I'm going to ask a very fundamental question, which is really, what kind of investment horizon are these social or impact investors looking at? And I'm quite interested to know kind of how the returns actually kind of perform in actual versus their expectation, because I also come from a world that you know, was the more traditional finance,
right? And
often there is a kind of like industry horizon time frame that they look at, kind of expectations on returns, but over here, because it combines social with profits, so I'm just wondering how.
It is, once again, I think you have to remember, this is not that different from traditional investment, right? So it really is, if you say traditional investment, the time horizon is 5 to 7 years. It's actually the same here. And again, it'll be less or more depending on the sector, right? So I think, again, it's very sector specific, right? If you have energy sector, yes, you have money for a solar panel, but then you'll be getting the cash right away. And we see very interesting models in the actually financing of these, right? But one of the things we do see is the fact that, and so we have been very sort of creative about it, is the whole notion of valuation, right? So what should be the valuation? And what we are, a lot of the social entrepreneurs, we see that they have seen too many of these .com, movies and .com exposure. So they say, oh no, but I was told my valuation should be like 100 million, and no, it's more like 2. So I think it's so what we have decided is there's a lot of times a big disconnect because again, just sort of lack of sort of knowledge, etc. So what we found out, what really works well with us is initially almost doing the first round as a convertible. Okay, so we're really not negotiating valuation. Let's just do a convertible round. And that can, and then you're working with the investors, and that can, turn into either you pay back the debt, or it can turn into equity, right? So it just gives you that little bit of a breathing space. And we also saw on the flip side with the investors, it gives them a little bit of comfort as well, And this is, once again, these are all the learnings for us, right? That, wow, who would have thought when we started this, convertibles would be something that investors would really like. Because if you see, what happens in traditional markets, debt is something always much more palatable, right? I mean, why does microfinance work? And microfinance dealt with debt issuance. End of the day, it's just that the whole concept of risk is really brought down, right? So we said, okay, we still need to have the flavors of debt. So if you do a convertible, you can actually do that. So anyway, so those are kind of the things that we work with. But I think what you see is a lot of success stories sort of that is documented by a lot of these funds who have operated in this space. And interestingly, obviously, this space, we always say, is supremely indebted to the microfinance space, because that's how it all got started. And now the other sectors were there, but I think microfinance really brought it to, mainstream. And I think, I strongly feel like, maybe I'm biased because I worked at Grameen, but that really kind of led this whole effort over the last 20 years. So, yes.
Hi, I'm Andres Spearman, co-founder of a social enterprise called Carbon Story, dealing with climate change, and we're launching in March. I have a question. Last year, we had a couple of articles in Harvard Business Review and Stanford Social Innovation Review talking about hybrid social enterprises in terms of the capital structure, meaning that you should not take a stance anywhere really along that continuum that we've seen, but rather trying to unlock the kind of not-for-profit grant at the same time as you sort of unlock equity, rather than pigeonholing yourself. From your perspective, to what extent is that feasible to do versus more academic utopia?
When I read that, I think that would be absolutely fantastic. And as a matter of fact, if you look at IX, we're very fortunate. We actually could do that. IX is a for-profit entity. Shudog is a not-for-profit. IX started off with $500,000 grant from Rockefeller Foundation, right? But again, I know also very well, we were very lucky that we got that grant of $500,000 from Rockefeller. There are not too many Rockefellers around, right? So I think that's the problem. I think this is where also the foundations come in, where it's fantastic that obviously these articles are coming out, because that capital has to be tapped from somewhere, right? So that's exactly what I was saying earlier on to our colleagues here, say Save the Children, where I see this as a trend, where maybe the INGOs can start it off, and then the rest of us, who are not INGOs, can actually benefit from, where the reality is there is a cost in creating something which is either serving the ultra poor or doing something which is so big, the idea that there's a huge sunk cost for it. So who's going to cover that, right? So you almost need that visionaries, even in the foundations, right? You also need the vision, and if it's not there, perhaps they're more willing to support INGOs, the work that they're doing, and maybe the INGOs will be trendsetters in this, where they start off with grant money and then they turn it into a for-profit. But I think there's definitely a model there. I mean, we are seeing it, but I think once again, how do you tap that initial funding? Is actually tricky, because we don't see a lot of that. So we, and we're often asked this, if there's somewhere we can get grant funding, and this is where we're also hoping maybe organizations like ABPN and all that can play a role, where the wealthy individuals are willing to give some bit of a philanthropy money, initially to get it started, or even if you give a loan with 0% interest and with a very long-term view and you forgive it, right? So there's different ways of looking at it, but there has to be flavors of philanthropy. You're absolutely right. Some of the things, not everything, but in some of the sectors. Right? I mean, if you want to add that, yeah.
I'm with ABPN, the Asian Venture Funding Network, and we're promoting to investors to take more risks, to use venture philanthropy, which is defined in many different ways, but it can mean grants. But it means grants that are investing really in organisations rather than programs, and that's the key difference, because if they're happy to build an organisation, then that grant investor you encourage and should be happy to let someone else profit from the organisation later on, and that's where there's a bit of a sticking point at the moment.
Yes.
Because people say,
for wealthy individuals it is,
exactly.
That's exactly it.
For someone else to profit.
Right.
But the other way of looking at it is, you only need to fund this organisation for 5 years, and then other capital markets will fund it for 20 years.
Right.
And that's a success.
Right.
But not many people have that view.
Right. No, you actually bring up a very good point, Simon, because I think I remember in some of these, I think when these articles came out, I think it was online, there were some blogs, and oh my God, really heated arguments about why should we use, our dollars to make rich people richer later on. I'm like, oh my God, you're just missing the point here, right? So I think you're absolutely right. It's just, again, that mindset, right? Changing that mindset. So I think we need more entities like Rockefeller Foundation, who is willing to do that. So I really hope the foundations step up. We are actually now starting the conversation with the Foundation Center in New York, and this is sort of my goal, because they're sort of the hub of all these foundations, that if they can play a role, with the foundations to do this. But you're absolutely right, it's something very needed. And I'm glad you're doing this. That's fabulous.
Excuse me. I'll also build on that. We run a social enterprise here, and I have a hybrid structure of financing. Opposite to rely on grant first, I wanted to sell equity to raise private money first. And then we had built the product that a grant giver liked very much, and they would like to give a grant for that for no reason, right? So minus 100%. And actually two parties like it very much, because for the investor, their investment is now leveraged to one-to-one, for one-to-one, right? For every dollar the investor put in, I had a $1 match of fund, of grant. For the grant giver, they like the fact that we will not face, we don't have to kill the mission if one day had to withdraw the grant. Because we are self-reliant and we're self-sustainable too. So we're very blessed. We're very fortunate in that way that we have a hybrid structure right from the get-go. So we sold equity based on the valuation for the social enterprise, but we have also received the grants, and both are in travel.
That's great. That's a very good example. Thanks for sharing. What do you mind sharing with us? What do you do?
I mean, the hub.
Yeah. Oh, okay. You're there. Oh, of course. Okay.
And Grace will actually be helping to mentor the Social Entrepreneurship Bootcamp here at Insead this weekend, too.
Oh, wonderful. Good.
We're tying everybody together.
I know, that's fantastic.
Maybe just one more question, and then we'll go out and get some refreshments.
Yes.
I'm Sahil, I'm one of the students here. I have a very basic question away from funding a little bit. I think a lot of us are still at a very early stage of figuring out how we want to pursue social entrepreneurship.
Yeah.
So in your experience, where is a good area to focus on? Is it on mobilizing a lot of people and getting people to kind of participate in such activities, or is it to actually coming up with a business plan, a very concrete business plan with a product or a service that we should build upon? As we're getting into the workshop, we're getting our brain thinking in that direction.
I think I would like to turn it around and say what you're good at. Seriously. I mean, end of the day, I think, again, maybe this is my snobbery, but I never took a single entrepreneurship class in business school. Because I had that, sorry, Christine. I had a snobbery, and I knew one day I wanted to start my own thing, but I said, well, people with PhDs are not going to tell me how to start a business. And again, I'm sorry.
You're not the only person who thinks that.
This goes to Wharton. If I were in Insead, maybe. But I think it's it really is what you are, and I think it's the first step is a little bit of soul searching, right? I mean, what you're good at, what you like to do. I mean, if it's something that you like to bring people together, maybe it's advocacy. Or if it's actually something that you want to build, right, and you want to go and talk about it, get people involved, maybe you're an entrepreneur. So I think you need to kind of sort that out first, and then you know. Okay? Okay, sorry. Yes?
From Singaporean.
Yes.
I'm not working in Indonesia. I'm a property developer in Jakarta land. About 20 years ago, we have Singapore branch of the Asia Pacific Community Development Corporation.
Okay.
That's Washington based.
Okay.
I was the founding director.
Okay.
So we didn't have much thought about it. We just jumped into it. What we did was we went to study some of the countries that have got border farming. And the favorite country which I am familiar with is Myanmar.
Okay.
I speak a bit of Myanmar.
Okay.
And border farming is an interesting thing. And at that point when we presented the project, there's still microcredit from Washington. There's still around 40 million, and some part of it went to Peru, and we were trying to bring some of that money over to Myanmar until there's this clampdown. The interesting thing about this is you have to be very local. When you want to start, you have to go in and see.
Yeah.
But what we did as a group, as part of Jakarta land, is that we went to Myanmar and we see this place in the Rakhine state, which is the border. And you find that the men folks are no more there. Where are the men? The men has left for town. And who's doing the farming? It's the ladies. It's a very tough job. So we came up with this idea that we have to buy some small tractors. We leave that to our friend in Washington. He got us the funding and we started this project. And why border area? Because of the cash crop. It can be sold across the border of Thailand and China and Yunnan.
Right.
I just say this because sometimes it's better not to know too much.
Right. Just go and just find out. Yeah.
But at that point, it wasn't our money. And eventually, Asia Community Development, Asia Pacific Community Development has to be defunded because we couldn't go on that. I managed an office and maintained an office in Aramugam Road. We have a small office in a factory, but eventually we ran out of money.
Right.
So that was a little bit of sharing from you.
Right. So I think that's the other part of the equation, sort of the sustainability, right? How to bring that in the equation. But thanks for sharing that. Okay, so that's it, right?
I'd like to thank you, Durreen.